Oh my, I managed to catch it. What? Trying to get onto stream. But that was easy money, innit? You didn't have to be a genius to work that one out. That was easy money. I think White House is up as well shortly. But that was easy money. And with all the market uptrends over the last couple of days, you really should have been positioning for puts anyway. That was beautiful. That come out of nowhere. That came out of nowhere. That's why you gotta be here every day. Take advantage. That was aggressive. Let's see if it drops some more though. That'd be nice. That'd be nice. That'd be nice. Oh, and drop another 10 points. I dare you. Sorry, I'm just trying to update the chat on as much information and what's going on. Alright, here we go.
And since then, President Putin and I have had an open channel of communication regarding the welfare of these children. For the past 3 months, both sides have participated in several back-channel meetings and calls, all in good faith. We have agreed to cooperate with each other for the benefit of all people involved in this war. My representative has been working directly with President Putin's team to ensure the safe reunification of children with their families between Russia and Ukraine. In fact, 8 children have been rejoined with their families during the past 24 hours. Each child has lived in turmoil because of the war in Ukraine. 3 were separated from their parents and displaced to the Russian Federation because of frontline fighting. The other 5 were separated from family members across borders because of the conflict, including one young girl who has now been reunited from Ukraine to Russia. I have learned a lot about this matter during the past 3 months. Russia has demonstrated a willingness to disclose objective and detailed information reflective for the current situation. The Russian Federation provided biographies and photographs of each child involved in this week's reunification, along with an overview of the social, medical, and psychological services afforded to the Ukrainian children. Further, I was provided a detailed report which verified the identities and circumstances of these 8 individuals. The US government confirmed the facts contained within this document are accurate. It is important to note The original verification report was jointly prepared by the Commissioner of the Verkhovna Rada of Ukraine for Human Rights and Office of the Russian Presidential Commissioner for Children's Rights. As First Lady, this is an important initiative for me. It is built on shared purpose and lasting impact. My ongoing mission is twofold: to prioritize, to optimize a transparent, free-flow exchange of health-related information surrounding all children who have fell victim to this war, and to facilitate the regular reunification of children with their families until each individual returns home. Additionally, I have raised concerns regarding those who were minors at the time they were displaced by the war, but have since reached adulthood and currently reside in Russia. Given the dangers of traversing this war-torn region, their safe return requires coordinated assistance. Accordingly, Russia has agreed to rejoin the individuals who have turned 18 within a short period of time. Again, this remains an ongoing effort. Plans are already underway to reunify more children in the immediate future. I hope peace will come soon. It can begin with our children.
You can tell, but I can
Thank
see
you.
it because I zoomed in on the pictures. I zoomed in though, so I can see it. But for them to put it up on the photo was a bit extreme. Tell them to put that, just, brother, forget all of that. Tell them to put that application in tonight before they leave the office. Oh, you see? You see? Well, yeah, but it's Friday, brother. Everyone should be working till at least 5. Just what I'm saying. So what's the problem in it? Like, they've obviously, brother. Do you know why I'll be on them? Yeah, because they've made you do all this extra palaver. Yeah, when we do our job to make sure that you don't have to do this, innit? But because, like I said, they've erased something to your alarm mails, you need to get your own peace of mind, innit? You've had your peace of mind. Now you've had yours, and you're telling them, nah, you lot were wrong. You shouldn't be waiting. Don't make me wait now, innit? Because you've made me go and, you know what I'm saying? You've made me wait a week, basically. We wasted a week, innit? And we could have had all of this stuff already in the pipeline. You know what I'm saying? Just because of that. But again, it's... Brother, I'll be on them. I'll be honest with you. I've said, look, you've wasted a week. I want you to put this in today. Do you know what I'm saying? Because, like I said, obviously we've got 50 to... Do it from home, yeah. Wherever you got to do it from, do it where you've got to do it. Do you know what I'm saying? Like, it should. It doesn't matter whoever does it. Whoever she needs to speak to get it done, just get it done. I don't care who does it, but get it done today at least. Yeah, there's no point flipping though, brother. There's no point because you're not gonna get anything done. No. I know what you mean, innit? Yeah, I know what you mean, innit? But I'm just saying, innit? There's no point. You might as well just be calm with them, innit? Just say, look, we've wasted enough time. You've made us go out when such and such is giving us the clarification that everything's okay. Can you just at least get this done today? So at least by Monday, Tuesday, we can at least start moving forward. Do you know what I'm saying? No worries. God bless. Bye-bye. Hello? Yeah. I was just gonna look, innit? Oh, that house is sold, innit? We just sold that one. Yeah. Yeah, of course I'm talking to you, you matter. The one that we was talking about not too long ago. Obviously, I got my stream on, innit? So, obviously, I ain't got you on loudspeaker, though. But, obviously, I'm not gonna disclose it yet because I want to create a video around this, innit? And, you know what I'm saying? But, yeah, that's just gone through. But what I was messaging you about is. Yeah. What I was actually messaging you about, I've got two clients. One looking for. I put everything in the chat, in it, in the group chat. Yeah. So, obviously, have a look at that and tell me what you think. But um, have a look with your own eyes as well, innit? If you can, innit? And obviously, I'll just any of these slow, any of the small ones that like this, you get me? I would just give you like a thousand, you get me, for obviously if you find it, innit? Or I even give you half of it if you literally do all the work. Manchester, we're looking 200 max, and Grimsby, they was just about to buy a portfolio from me for about 490 in it, let's say 500, so they must have that kind of buying power in it. I'm just waiting for confirmation, but once I get the confirmation, obviously I'll let you know. But I think I found one in it. Like I said, there's the one in Grimsby. There's two or three that I put in the chat, but I've had to put them in the chat because my computer's slowing down because I've got so many tabs open. So I need to literally exit out all these tabs. But have a look in those two areas, innit? Look, Grims only look for like a mile radius, innit? Yeah, mile radius, innit? They only want to stay there, and I think there's a place called Lancaster or something like that, and that's pretty much right next door, innit? So if you just put like a mile, and then just take it from there, innit? Obviously, if you do, is it 2 or 5? Obviously, it's going to bring you up a lot more, so you're going to have to, put all the filters in to obviously squeeze it. Yeah. But alright, shout me in it in a bit, and obviously find out if obviously send me a message about that thing to see if he does from the ground out. Alright, buddy, nice one. Alright, thank you. God bless. Bye-bye. Boom. Another happy customer. I love it when I do a good deed. You know what I'm saying? I love it. I love it. I didn't even get to hear what that Trump thing was about either because a call came in. Well, we got this moolah to make. So happy for his family as well. I love seeing people get what they want, man. I love it. Oh, now the market wants to keep falling. Let it keep falling. Man, I Man, I love it. I love my work. And I love when I see people get what they want and happy customer clients. I love it. I love it. I love it. You know what? You know what I'm saying? And then that's when they tell their friends. That's how you make good business. You know, you don't need to cheat people. I can't wait to do this video with them. Look out for that guy that's going to be on the channel. It's going to be on the channel. You guys can see, because I've been talking about this for a good 10, 15 years, but I don't know. Sometimes you just gotta, you know, I've been really shy, not shy, but didn't really want to do this in the public eye, innit? I'd rather stayed in the background. Once we know what's going on and we know how to move, we're happy. And then we just made some more money on the spy going, guys. Let's go! Real estate stocks! Let's go! Oh man. Do you know what people say? Do you know what someone said to me? He said, no matter what happens to you, bro, you always bounce back. You gotta stay focused, man. You gotta stay focused. Right, let's get back into the game. Let's look for another play, because there's money to be made. Look, today that looks like it's gonna bleed. And if you don't know, you guys that I like to trade in gold, I can imagine gold is running. Let's clarify for you guys. Let's clarify for you guys. Oh, okay. I love this stuff. I love it. I love it. You gotta love this, innit? Trust me. Trading is not for the weak. Honestly. It's not for the weak. Business, it's just not for the weak, innit? Honestly. You gotta really be patient, innit? And that's just, I think that's just anything in life, innit? Patience, consistency, and yeah, you'll be fine, innit? If you're looking for quick success, you might as well leave this channel, because this is not the place. But if you give me some time, guaranteed to change your life. So yeah, if there's anyone out there that's watching this and needs some help, please reach out. Follow me on Instagram. That is Shugs1. That's SHOOGZ1. Profile picture is exactly the same as the YouTube. follow your boy. Need to start posting on there again as well. Been Instagram shy recently. Looking like this story is gonna be amazing. That one. Fuck. I don't know why I didn't think of that. It's too late now. Ah. I've got so much going on. This is why I need a team. So I can just focus on the trading, because that call there just cost me more money when I think about it. No, not really. I think it's dragging everything down that. Yeah, I think that's dragging everything down. Yeah, it's dragging everything. either that or gold. Could have played multiple plays in it, to be fair, but you would have been looking at too much angles. Oh man, I'm gonna make a killing on this play. Sorry. I'm trying to put a message together for someone.
Super healthy from a valuation perspective, and they're really early. We haven't quite seen the budgets catch up to where we're seeing these valuations. The Department of War is one of these places where we know how much capital is going to be spent in a particular domain, in hypersonics and in critical materials, but we haven't quite seen the promise come out yet.
Well, you've backed Additon, we think a data miner, Genlogs. It's incredible, some of the portfolio that is being built. Morgan Hitzig, partner at Venrock, we thank you. Let's just return to the public markets. We've had a healthy check on the private ones. We are in sell-off mode for this Friday. The reaction to the news, the Truth Social post coming from the president that he sees no reason now to meet with President Xi, as had been anticipated by the markets, and maybe more tariffs should be dialed up as he feels that China is becoming more hostile. Ed, you see the reactions from tech stocks, but the S&P 500 writ large.
Yeah, there is a more profound reaction in chip stocks. You know, a lot of the conversation of the last 45 minutes has been about a negotiation, economically speaking. Rare earths on the Chinese side, semiconductors on the American side. You look at some of the individual names, AMD and NVIDIA, of course, because the other news we got overnight is that Congress finally ruled on their ability to export to China, volumetrically speaking.
And we'd had David Sachs on previously talking about whether indeed that is a national security threat to be allowing some of those sophisticated chips to be exported into China. We can keep this sort of conversation going.
Yeah, David's point's really simple. It's better to sell deprecated chips than none at all, but we need something in return in an economic negotiation. We are live at Anduril's headquarters in Costa Mesa, California. This is a special edition of Bloomberg Tech. And right now we're joined by Anduril's founder, Palmer Luckey, to close out the conversation. It's good to see you.
Happy to host you here at HQ, and thank you for having me on the show.
A curious piece of timing. My assumption is that the president's True Social post was scheduled for 8 a.m. Pacific, 11 a.m. Eastern. We don't know. But it's very simple. He had said that he intended to meet with Xi in 2 weeks' time, now doesn't see a reason to do so. He threatened to massively increase tariffs on Chinese goods and says that China is becoming increasingly hostile. When you and I met in January, you opened our entire conversation with a forecast on where you felt the relationship between US and China was going.
Yep.
Were you right?
Yeah, I think so. I mean, the reality is that our interests are relatively divergent at this point, and that's particularly true when it comes to semiconductors, when it comes to Taiwan. And so Trump, you know, I think what he's doing right now is he's playing the art of the deal. He's trying to get the best deal that he can, and I understand that he has to manage this reality that right now we are kind of dependent on China for a lot of things. But, you know, I think what we talked about last time is this is why we need to reindustrialize. This is why we need to have our own rare earth supply. This is why we need to be able to make our own chips and our own computers and our own products downstream, because it takes away leverage from China. They do have a lot of leverage right now, and so it's very hard to make deals with them. I think it's actually healthy for the U.S.-China relationship for it to not be so dependent on China. Right now, we don't have great solutions.
Can you kind of quantify it? I mean, so you're so involved in Arsenal One, we will talk about that. But right now, the weapons that Anduril makes and the autonomous systems, how dependent is that specific supply chain at this moment on China?
Anduril's done a uniquely good job of getting away from China versus not just other defense companies, but also compared to most American companies in general. Remember that we are sanctioned by China. Remember that our executives are personally sanctioned by China. And so we have we're not doing this for, you know, leverage or negotiating reasons. We have to get off of Chinese supply chain, and not just things that are literally made in China, but even things that are dependent on China. So if it's dependent on Chinese precursor chemicals or Chinese equipment or machinery or processing, we have to make very aggressive moves to stay away from that and keep a U.S. and allied supply chain to the absolute greatest extent possible. So I would say Anduril's not even really what I'm concerned about. It's the broader economy and maybe some other defense companies. If you could believe it, there's lots of U.S. defense companies that haven't been sanctioned by China.
And therefore, they haven't had the foresight to go and build it as you are in Ohio. How is that going? How is Arsenal managing to hit the milestones you want to see?
So Arsenal is not just important, but it's necessary. So you guys know it's about 5 million square feet of manufacturing capacity that we're building in Ohio. We have to build it. We have so much volume that we just have to output that we can't do it without that new site. We started building that site many months before the government gave us these contracts that are now going to fulfill its capacity. And thank goodness we did. Like this year, our production is up 400% over last year.
I'm sorry, as in Arsenal?
Non-Arsenal one.
Okay.
No, I'm saying our non-Arsenal production is up 400%. And then so next year we expect to see an equally large bump up, and that is going to be critical for Arsenal to come online. We actually already have the first round of employees who are going to be working in Arsenal. We brought them from Ohio to HQ. They're going to be here for the next 6 months. Or I guess it's less than 6 months now. They've been here for a while. And that way they're able to get indoctrinated in our processes, work on our existing manufacturing systems. And then when Arsenal 1 opens next year, they can go in and hit the ground running day one.
What do you need from the Department of War?
What do I need from the Department of War? I'm getting a lot of the support that I need. I mean, across the Navy and the Army and the Air Force, there is a recognition that we don't have time as a country for business as usual, that we need to move much faster, that we need to be building new things in new ways, that we need to design weapons that can be manufactured by the industrial base we have, the talent base that we have.
We've got that talent?
The country has the talent in spades. They're just working on the wrong things. Most of our best talent, contrast this with the Cold War, is no longer working on national security problems, but is working on things like advertising optimization, on new apps, on tools of entertainment rather than tools of deterrence. And I've seen that reversing. There's a lot of people, and I'm of all ages. We're talking people who've been in the industry for 20, 30 years, all the way down to kids who are just going into school, learning disciplines that are relevant to aerospace and defense. I think that there's a lot of people who are realizing we've been resting on our laurels and coasting for a couple decades, and that our tech industry has to get in gear and work on more important problems.
Palmer, there was a report about the NGC2 system. It named both Anduril and Palantir. We've asked Palantir through Shom to comment on that, but the report in Palantir's case moved markets. Could you just respond to that reporting, which came from Reuters, and explain the sort of timeline and the inaccuracies that you feel there are in that report?
So you may or may not remember this, but I was a journalism major myself. I was only a semester and a half away from graduating. I was the online editor of the Daily 49er, which was the Cal State Long Beach student-run newspaper. So I care a lot about this stuff, both as an Anduril perspective, and then also just from a journalist perspective. The journalist who wrote that Reuters story would have been failed out of the class by any of my professors. He refused to include our on-the-record statement. He refused to include the on-the-record statement from the Army because they fundamentally made the whole story not a story. There was an analysis saying, hey, there's all of these security problems, like the system, the prototype for NGC2, Next Generation Command and Control. It's not tracking what the users are doing. It doesn't have any passwords to log in. There's no security turned on. And they said, oh my God, this is a huge problem. And we said, guys, this was an early prototype. The Army wasn't paying us to demonstrate user accounts. It was paying us to demonstrate integration of different sensors, different weapon systems, all into one pipeline. And Lattice has all this functionality. We do this all the time. It's not like we don't know how to do this. And the Army said the same. They said, yeah, we just turned on all those features. Just a few weeks later, all these issues that you're talking about didn't exist. This was an internal security audit, just noting that these things were a factor in that early prototype. Yes, there's no access control. Yes, that is a risk. Yes, we have not audited all of their security, all their security code. That is a risk. But that's completely normal for early development. But Reuters didn't include our quote, didn't include the Army's quote, because that would have made the entire story irrelevant. So instead they include quotes exclusively from our competitors and from so-called anonymous sources saying that Anduril and Palantir are running this fundamentally insecure thing. 99% chance that was planted by one of our competitors who had access to that memo, and there was only a few people who could have done it. And I can make people look bad by slicing and dicing memos too. I'll show you if I want. I'll get back into the journalism game.
We can say pretty definitively we've given you the opportunity to comment on that report.
You absolutely have. I'm using this opportunity to attack my enemies.
You just mentioned your competitors. Let's call them legacy primes, right? Before you came to set, I read the data piece about still the dominance of those companies in proportionately war contracts that the Department of War contracts they're getting versus Anduril. They're still getting them, Palmer.
Look, I remember I did not say that it was necessarily a prime who planted it. There's a lot of people who are competing. I think there are like 40 companies competing for NGC2. I'm not saying that it isn't. I'm just not saying that I didn't say that it is. Look, these guys are still winning a lot of contracts. The reality, whether we like it or not, is that these companies do have a lot of important weapons capability. We don't want them to go out of business. We don't want them to fall over. Anduril's working with a lot of them. I mean, so that's my bias here. I mean, we're working with Raytheon. We're working with Lockheed. We're working with Northrop. We're also competing with them for programs. I think that in general, the industry needs to move towards a model where companies invest more of their own money in these products. Where they fail, they need to skin their own knees, not the knees of taxpayers. And companies disagree as to the extent of whether that should be true. I think companies like Anduril in the short term and the long run are going to do much better, especially because the services want to see more companies acting like Anduril. They want us to have more skin in the game. They want everybody to have more skin in the game. And they know that it incentivizes the right kind of behavior.
Talking of skin in the game, there are a lot of retail investors, a lot of institution investors who want more access to be able to skin their knees when you slip up, but also benefit from your growth. When are you going to IPO?
So it's going to be in the next few years, and we've talked about this before, but
but it's still the #1 question we get for you. It is. It just is.
So look, we are on a path to IPO. Like I can explicitly say that. I'm not going to be coy about that. We are running the company as if we are going to be audited by the auditors that are looking at public company traded companies. We're running the company's financials as if we need to be accountable to public market investors. You need to be a certain shape of company to be in the public markets. You need to have a certain level of credibility in your accounting process across the organization. So like the old school Anduril stuff of, hey, toss it in the bin. No need to do any paperwork. No, you actually have to properly account for what's on the shelf, what you've thrown away, what's working, and we've gotten into that swing of things. It's going to be in low single-digit years. And by the way,
do you have to be profitable for that? Like at the moment, it is very expensive what you are trying to build.
Agreed. So my philosophy on this is that if you are going to be in the public markets, you need to be the shape that the markets want you to be. I think that's not a very unprofitable company that has a trend that looks very unprofitable. So my personal opinion, and I'm not hiding the date from you. We genuinely don't know. We're not going to do it till the right moment. We don't have to. Private capital is amply available to us. But what we want to do is either be profitable across the business, or we want to be on very close to it with a clear trend showing it's certainly going to happen. And I don't mean it's going to happen someday, years in the future. I mean like, hey, we have these contracts, and if you just believe that we are going to deliver the things that we've already sold, then you know that we're likely going to be profitable.
I'd like to talk about some of the weapons and autonomous systems that are behind us, if we can. You have both relationships with the US government and defense apparatus, but Western allies too.
That's right.
Are these prototypes, or do we see militaries around the world deploying them? Are they real? There are going to be loads of people watching this show that actually don't know Anduril, but also many skeptics say, like, these are prototypes and this is a startup in its infancy.
Well, if we do our job correctly and we stop some of these major wars from starting, then people are going to continue to be unfamiliar with Anduril. The bizarre nature of our job and also the job of our military is that a better job we do of not having a fight, the easier it is for people to either not pay attention to us or, in fact, say, well, those guys are useless. We don't need them. It's only when everything goes to shit that everyone talks about how great the military is.
I'm going to jump in and apologize for the choice language to our audience because it's quite early here in the West Coast.
I'm so sorry.
It's okay.
I'm a young guy, and I've got really bad. I don't have like that English posh type of
passion.
Yes, exactly.
We accept the apology. Same question: are these systems deployed in the real world by nations in case they need to use them?
So many of these systems are. For example, Altius has been in Ukraine since early in the war. We've also shipped a lot of these to nations that are really, I think, on the precipice of conflict, like Taiwan. Others of these, I think, have not been deployed by anyone but the United States. Roadrunner has been deployed by the United States, but there are other people in other allied nations who are very interested. Same thing with Fury. We've already delivered the first Furies to the United States Air Force, but there's a lot of interest in Korea, in Japan, in a variety of European nations. Australia, these are nations that are strongly allied with the United States, and they want to have commonality. Think of it this way. Everyone who's buying F-35s is bought into the U.S. plan of how we're going to fight and deter these wars. Something like Fury that tightly integrates with an F-35 is of a lot of interest to them, especially if it means they don't have to develop it all themselves, and especially if we're willing to manufacture it in their country, which we are. I think that we need to be having manufacturing bases across all our allies. One of the superpowers the U.S. has that China does not is friends around the world. China does not have friends around the world. They've got a couple buddies who have to suck up to them in their immediate local region, but they do not have people across the planet who are willing to work with them to build the war machine that we need to deter their aggression, we should be taking advantage of that, not pulling back on it.
We started on China, we end on China. Andrew, founder, Palmer Luckey, it's been a joy having you.
Thank you.
With the odd choice word. We appreciate it. Now that does it from this incredibly special edition of Bloomberg Tech. Of course, right here from Anduril's headquarters, it's been astounding. Let's just quickly check on the markets though, Ed, because we've been steeped in the discussion of US-China, and that is what's driving the NASDAQ lower, the S&P lower, and the stocks lower.
Yeah, look at the semiconductor names and how they've reacted to this news. We will continue to work out what happens next. We do not know if the meeting between Xi and Trump is cancelled. We're inferring that it is now in question, and so are the markets. Recap, this was a pretty astonishing focus on defense technology. You can do that on the podcast. You know exactly where to find it. Thanks to all of you that listen to the podcast. We've had a lot of feedback on that recently, online, Apple, Spotify, iHeart, and always on Bloomberg.
And thank you to Andrew for hosting us. What phenomenal headquarters.
This is Bloomberg Tech.
From New York City for our viewers worldwide, I'm Scarlett Fu. Bloomberg Real Yield starts right now. Coming up, the U.S. government shutdown enters its 10th day with no end in sight, further delaying critical economic data as we approach the Federal Reserve's October policy meeting. Tariff concerns rattle markets as President Trump ramps up tariff threats against China. And the recent bankruptcy of auto parts supplier First Brands is revealing cracks in credit. We're going to get Double Line Capital's take on what this signals in just a moment. But first, we begin with the big issue, the lack of official economic data clouding the economic picture.
Well, with this shutdown, the Fed really is flying blind.
We're definitely dealing with less information, but we're not flying blind.
In the absence of data, people seem to be perfectly happy.
It's amazing how well the economy does despite Washington.
The economy can change on a dime here.
The bigger macro picture is getting more confused.
What's really important is the volatility of inflation.
I'm not sure that the Fed can fully ignore what's going on with inflation.
We just don't think treasuries offer a compelling value here given this inflationary risks.
It's very important that the Fed stays focused on that mandate for price stability, even with early signs of a cooling in top-line hiring.
The slower the Fed goes up front, the bigger the risk is that they have to do a little bit more later.
Well, I think they cut again, in part because they may not get any more official data.
And no data means more caution.
The risk to look for right now is, can the Fed cut rates as much as the market is presently anticipating?
The Fed is likely to cut. The economy is likely to grow.
And those headlines last hour from President Trump on China and tariffs are reminding investors of trade risks still in the markets. You look at the dollar, it is weakening a bit in the session today, but if you look at it over the past 5 days, it is still set for its best week since early August, extending that recovery off its lows in mid-September. Now, here's a look at the debasement trade that a lot of people have say are taking over markets right now. And this is through ETFs. The biggest gold fund is GLD, and it's in yellow, appropriately enough. It saw assets rise almost 80% in the past 12 months to $131 billion. That's compared with the two biggest Bitcoin ETFs, which is the white line here. Their combined assets are up 272% to $122 billion. Bumping along the bottom of this chart here is the green line, and that is TLT, the largest long duration treasury ETF. Its assets actually dropped 16% to just under $50 billion. Ken Griffin of Citadel sees gold's record run and says that investors are actively looking for ways to effectively de-dollarize or de-risk their portfolios as excessive stimulus stokes markets and drives what he calls an economic sugar high. Now, all this mixed economic messaging has JP Morgan Chase's CEO Jamie Dimon ready for
the best, plan for the worst.
And you're not worried about a recession in 2026 for the U.S. You made that clear.
I think it could happen in 2026. I'm not worried about it as a different statement. You know, markets have to make a forecast. I want to point out that forecasts have almost always been wrong. And the Fed's been wrong too. If inflation goes up, starts ticking up for whatever reason, and it might, it's going to be hard to do 100 points. If unemployment starts going up, well, obviously they're going to do something. So we'll see.
Let's dig into the macro backdrop here with Jeff Sherman, Deputy Chief Investment Officer at Double Line Capital, joining us from California. Jeff, fantastic to see you. You heard what Jamie Dimon said, and like the Federal Reserve, the bond market is pretty much divided between worrying over a slowdown in the labor market, dragging the economy south, versus fear of inflation due to tariffs reigniting at some point. What's your view?
Yeah, I mean, we're sitting at the crossroads here, too. And I did a webcast this week, and I titled it Labor at the Crossroads, because so much focus over the last couple of years has been on the inflationary impact, and the Fed's response over the last 3 years has been very wrong on Fed policy. I remind you, over the last 3 years has been very wrong on Fed policy. That is, they were very slow to acknowledge the rate hikes, and then further really pressing the string of trying to get rate cuts sooner than possible, or sooner than the Fed would actually respond to. And so here we are again at one of these crossroads. And I think what Jamie Dimon said is right, that, you know, if there's some pressure on the inflation data, maybe the Fed's a little more hesitant to do anything. But if we see degradation in labor, they know that mechanism they need to really stave off quite quickly. And so what we're seeing here is this very strange equilibrium within the labor market. And what I mean by that, and Jay Powell acknowledged this 2 press conferences ago, was saying that ultimately, you know, we're seeing the demand for labor come down. That's job openings coming down. But also what we've seen is the supply of labor coming down. And in some ways that's related to the immigration policies as well. So when you put this together, it's really a tough time for the Fed. And then as you led into that Jamie Dimon talk, all I heard about was the uncertainty with lack of economic data.
Is the
and we
official
still get data,
anniversary
we still get a lot of the
and
government data. And it appears to me that so far that, you know, with the Fed at the last meeting giving the risk management cut, it seems that they're going to try to go that direction one more time. But I think they really want to be sensitive to the incoming data and really focus on the labor market. So I think it's probably a done deal for another cut. The market has 2 more cuts at the subsequent meetings, or the rest of the meetings for the year. But I do think that, you know, maybe that December cut maybe doesn't come through as much, depending on what the data looks like. So as always, here we are once again, data dependent. The difference here is we don't really have a lot of data coming through from the government side.
Absolutely. What we do have, though, are threats, generic, vague threats, in this case on China and massive tariffs. How do you think about that as you consider the inflation outlook? We were showing a chart earlier about how inflation has pretty much stabilized, but well above that 2% target the Fed has identified.
Well, it's very important, Scarlett. And when you think about the inflation data, if you dig into the pieces there, what you've seen is core goods start to contribute positively to inflation again. And, you know, over the last 15 years or so, it's primarily been a drag on inflation. So some of that is the tariff policy coming through. And secondly, what I'd like to point out on the tariff policy is that we've seen the administration rave about how much revenue they've generated in the last 30 days or so based on the tariff policy. And so I think the run rate right now, if you analyze the monthly data, is around roughly $350 billion. And so what that tells me is that not necessarily we've had a successful policy yet, but ultimately the inventories that are being built today are predicated on this new tariff policy. And so what that is the already announced tariffs. Now we've also seen pharmaceuticals come in the mix. We've seen recently home furnishings. Now there's the threat of China again. There's semiconductors again. So this is the ever-evolving kind of tariff roulette where no one really knows what the policy is, but we do know that we do have these baseline tariffs. And so I think it's too early to say that the inflation's been contained off of the tariff policy. And I think we're just starting to see the semblances of it. Now we're going to get, third quarter earnings coming up. And unfortunately, I don't think you're going to see a lot of that tariff pricing in there yet, whether or not it's being absorbed at the margin level, where it exists in the supply chain, or if it gets passed to the end consumer. So bringing this all back together, I think the jury's still out for the next 3 to 6 months on whether or not we're going to see these inflationary impulses. And I think that also puts the Fed in a more cautious position. Though I agree with Mr. Dimon on if there's degradation in labor, they will move quickly.
Okay, well, that lack of visibility is showing up in how investors are positioning themselves. There's the debasement trade, the stampede into gold, into silver, into Bitcoin. To what extent do you see the global bond market supporting or backing up that debasement trade? Because, for instance, the 5-year break-even rate in the U.S. remains unchanged and kind of close to the Fed's 2% target.
Yeah, that's the weird thing about the break-evens and the inflation linkers market here in the U.S. is that there's been this eerie sense of stability and confidence in that 2% target. And I don't like that part of the curve when we talk about trying to buy tips. In our shorter duration portfolios that we run, we've been buying shorter duration tips because we think there was some optionality, especially when break-evens really dipped on that 2-year point early in the summer or late spring. And so when I look at the debasement trade, what I also look at is the 30-year bonds across the developed world. And what you've seen there is really a rejection of investors trying to step into that, even when there's this perception of a Fed cutting cycle. And so I think the idea that, the policies here are not really U.S. friendly, they're not dollar friendly. And if we're going to continue to, kind of put pressure on the dollar, it's going to put some inflation in the U.S. as well. But the developed world suffers from a fiscal overspending, and that's what's being reflected there as well. And so I think the debasement trades make a lot of sense here. Granted, they have a lot of momentum at this stage. And as you mentioned silver in there, silver hadn't been part of the discussion until the last few weeks. But ultimately, I think there's a lot of investors looking around saying maybe the strength of the U.S. dollar has been overdone. And by the way, the dollar has been overvalued, whether you look at real effective exchange rates, trade-weighted basis, purchasing power parity. It's been overvalued for almost a decade now. So probably it's time to get some more stability in there and bring the dollar down. And I think that's what you're seeing reflected there.
All right, Jeff Sherman of Double Line Capital, he is sticking with us because up next we've got the auction block. After a sizzling September, October, pretty much off to a slow start for credit sales. Earnings blackouts, the shutdown, and uncertainty caused by the likes of First Brands causing maybe a bit of a pause. This is Real Yield on Bloomberg.
Abundant space, infinite time, the ultimate luxuries, sailing the Saudi Red Sea. It's a feeling, natural wonders that stir the soul, coves unexplored, super corals untouched, oases unseen, where land meets sea, a new Arabian future emerges. Sunset rituals, stargazing over ancient lands, unique Arabian experiences reserved for those who come by sea. Refined and super chic. This is the Saudi Red Sea, the Arabian super destination.
Global connections are vital for business expansion. Nearly 1 in 2 business leaders.
sorry. I'm literally just zoned in. Nothing's going on. Obviously, that drop just happened, so markets can obviously just relax for a minute. Will it continue? We shall see.
accelerated, of course, with these growing signs of stress in the London market for silver, which is the epicenter of global bullion trading. Meanwhile, on the production side, Wheaton Precious Metals CEO Randy Smallwood says that more silver is unlikely to become available quickly. He spoke earlier on Bloomberg.
In the resources industry, if there's that industrial demand and that investor demand that comes into play, you can't operate sustained periods of time. As I said, since 2017-18, in deficit mode. Eventually, you're going to run out of the material. And one of the unique things about silver is that most silver is produced as a byproduct. It usually comes from lead zinc mines and from copper mines, more than half of silver. And so unless lead zinc prices and copper move, you're not going to see more silver production.
For more on what's been a historic week in metals trading, let's bring in Samantha Dart. She is co-head of Global Commodities Research at Goldman Sachs. Samantha, good to speak with you. How are you thinking about gold and silver and the moves that we've seen in silver, which has actually outperformed gold, as hard to believe as that is, given the gold's record run?
Yeah, we normally look more closely at gold than at silver. And on the gold side, we see that the main drivers of this push higher have been higher ETF positionings in Western ETFs, as well as higher central bank holdings, whereas more the net spec positions seem to have been more stable. And this matters because this type of driver is stickier. So when you look at ETF positions, they tend to stick around, and central bank holdings as well. So when we look at this step up, and then we look at what can come next, we still expect a little over 20% upside from current levels. So we had, as a result of this run up, we had to raise our forecast for December 2026 from 4,300 to 4,900 as a result. And silver is interesting because you mentioned that the impact to prices was higher than in gold because silver is a smaller market. So you can have sometimes the same notional show up in the market, but the impact you can have, the volatility you can have in price is going to surpass that of gold.
Yeah, so the distortions maybe show up a little bit faster in the silver market. One thing that we've been pointing out is the dollar and how it's recovered since mid-September when it hit a 3.5-year low. The dollar and gold tend to trade inversely, right? When the dollar weakens, gold goes up and vice versa. If you have the dollar rising, how much further can gold go?
You know, the way we look at these two assets is not that dollar will drive gold, but that sometimes you have a common underlying driver behind both and pushing them in different directions. I think because, you know, I mentioned the upside for gold in our view over the next year is a little over 20%. Almost all of it, just about 19 percentage points of that, come from what we...
I didn't cut it there, but let me tell you this now. Gold will not be running up another 20%. Actually, let me take that back. Let me rephrase that a different way. Gold can go up, yes, there's a likely chance of it going up another 20%. But will it hold up and stay up? There's a couple things that obviously will factor into this, obviously economically, innit? Things obviously going on around the world, interest rates, all these kind of things, are houses, like all these things are going to factor in it. So could it's a possible, but the way how they just promoted that, I wouldn't bank on it. Like I wouldn't bet the house on it, if that makes sense, innit? And as obviously you know, Trump's been calling off a lot of the wars anyway, so be careful with that information. My best thing I would say to you is trade what's in front of you, innit? Don't try and think too far, too ahead, because we're in skeptical times, innit? So that would be my advice. Again, not financial advice. Like SPY wants to hit a new low. That didn't last too long. Gotta be careful for these pumps and dumps. That didn't last too long. That didn't last long. Yeah, this is gonna carry on dropping. This is gonna be a bad day. Yeah, not looking good. Not looking good. That just, oof. Oof. That's just given up what a month of gains was probably. Yep, close to a month of gains. Oof, that is painful. Let's see if it keeps bleeding, man. Well, guess what? We're not bothered because the portfolio is equally balanced. Balanced. Oof, that is nasty. That is not good. This comes down to like 550 today. Ooh, that's like another 9 points. We still got another 3 hours to go. Ooh, this could get ugly. This could get ugly. Make sure you hold it on to your plays and take in profit. Take those profits. I love this. I love this. So if you was at work now, all you had to do is be in the chat. Boom, you would have got a message saying, yo, SPY, market. Boom, you would have came into the chat. Bam, exited your play. Went back to work. Come, keep looking at every little 5-10 minutes. You would have holded that for about, what, a good hour? I would have, to be fair. I would have holded that for maybe 10 minutes. Sold some. And then hold the rest, you know, rid that, ride the wave. Ride the wave. Well, I'm gonna show you the profits on the plays. I go show you. I don't even want to show the profits on the plays unless I do them live in front of you lot. But obviously, as you can see, go look at my previous videos where I'm showing you where the market's dropping and I'm making the money. Same thing, innit? So pay attention, pay attention. It just takes patience. Patience. Yeah. Yo, Z. And you need the know-how. Know-how is important. Not to be a gambler. Well, we all do it. I've done it, so I understand it. Okay. Barber and Spy look identical. need to do as well. I need to figure out a way. What do I do? I think I might need to start a fresh account, because I need to do a way where I can pull up the account without showing what we're holding already.
science, but using it appropriately for our country, which
Do
might
we have
include.
enough data, though?
That's what I was going to say, which might include more research in this area. For example, there are a lot of treatments from Indian medicine, from our culture that haven't yet been adequately validated. We need to do more research about that. We need to do more research about the kinds of therapies, psychotherapies that would work for India. So absolutely, we need a lot more data because a lot of data is on Western populations that may not have much relevance to our population.
Is that something the foundation may want to explore, getting into?
Something we're already doing.
We are.
Absolutely. I mean, I have to give you an example. I think, like Dr. Shah was alluding to earlier, the ability for, at least in rural areas, to have the backing and support of a community. And as we're doing with the community-based mental health program, if you look at the need gap in the country, as well as, compare the number of people suffering from mental illness as well as the number of professionals, we're probably not going to, cover up that gap for a long time to come. And so what are the other types of interventions, can we learn from other organizations that are doing similar work? And so the community-based model is something that we, back in 2016 identified can apply culturally to India. And that's what we're seeing on the ground, the power of collaboration, working together. You have beneficiaries, you have their caregivers, you have the ASHA workers, you have district level administration, you have sarpanches. So the whole sort of rural community coming together. I'm not sure if something like that would work in urban areas because it's, we're sort of moving towards more nuclear families. And but I think largely India is still a collectivist society. So I think that's something we could, tap into.
And this is an example of what we are seeing here in Chinwara, where it's one psychiatrist who visits, but we have the ASHA workers, we have local counselors, peer counselors, and they have transformed the mental health of this community with, we have reduced the need for psychiatrists, leveraging all the other resources that this community has. And that's amazing to see a community that's empowered through knowledge, awareness and motivation and a sense of community. It's amazing.
Absolutely, and that's one of the ways of being able to bridge the large deficit that we have in terms of practitioners. But Deepika, I want to go back to what you said, that you like challenging the status quo, that you consider yourself almost a disruptor in many ways. But it couldn't have been easy. I mean, it's one thing today, you are one of India's biggest brands, one of the biggest brands globally as well. You have the money to speak up, and that brings with it power and authority. But how did you find your feet? How did you find your voice? What did it take for you to be able to get here, to get to this position of calling yourself a disruptor and a challenger, so to speak?
I don't know of any, I think I've always been like that. I can actually take that if you're okay. So I have, in cricket, if I can give you a cricket analogy, I'm the non-striker who's watching her on strike batting, right? Yeah. So, and I see the similarity between her and my dad. I think they have the ability to break out of their comfort zone when required, and sometimes even before someone else realizes it. So I think, my dad did that in his career. He moved to his training base from India to Denmark in the 80s or late 70s, which was absolutely unheard of. And I think she's done similar things as well at various levels. So I would actually put that as sort of number one. And then secondly, I think just the ability to constantly reinvent, whether it is, in terms of the craft itself, or understanding the requirements. I mean, we don't come from a film family, right? So today, if I step on a film set, I don't know what is going on. So I can imagine.
You were very good with all the cameras this afternoon. You knew exactly which one was doing what.
I've done enough of these interviews. But, I can just imagine, for her to say, I want to be an actor, and then stepping on a set and not knowing anybody or not knowing what's going on. So basically just having to learn everything from scratch.
Being thrown into the deep end.
Coming back to the first point that I made, which is just fearless and ability to step out of your comfort zone. And if I may add, I think also for me, this deep need to be ridiculously honest and authentic. Even if it means I make mistakes, or I say things that people don't agree with, or walk a path that, that people have not. I basically have I'm okay with conflict. I'm okay with dealing with conflict and addressing conflict. I'm okay with ruffling feathers. I'm not someone, and like you said, I've said, I'm okay with challenging the status quo. Because I've just always been like that as a child. I've never been someone who will just see something for the way it is and just be okay with it. If something's okay, it's okay. That's great. But if I can see that something can be different or can be better, even if there are systems that have been age old, I'm okay to ruffle those feathers.
For 22 million people will see their premiums are going out now. Are going out now. People have to decide whether to sign up for health care coverage, and as far as they know, it's at double the premium. They can't afford that.
Well, Congressman, there's certainly no shortage of big stories to ask you about today, but we'd be remiss if we didn't ask you about the Middle East and the president's forthcoming trip to the region. How are you feeling about this tentative peace deal? Are there reasons to be optimistic, bright signs here, even though it feels like we've kind of been close to this before, only to see a setback?
Hopeful, optimistic may be too strong a word, but if the hostages are released, and Hamas is no longer in control of Gaza, then we can move forward. And it looks like that's what the settlement calls for. We'll see whether whether Hamas disarms and whether their leadership departs the region. But phase one is the release of the hostages, and that day can't come too soon.
Just got about a minute left, Congressman. If this does hold, should Donald Trump get the Nobel Peace Prize? He didn't make it today.
Look, you'd have to evaluate Donald Trump's actions on the world stage in total. And I don't think they're quite Nobel Prize winning material. But look, Hamas has been pushed into a small corner of Gaza. They realize that Israel can take that corner as well. And I think that it's not so much what the president has said. The deal that he has offered is very similar to what the Israeli negotiating position has been all along. Free the hostages and free the people of Gaza, 2 million of them, from oppression from Hamas.
Well, he's on his way. Be there on Monday, apparently. Congressman, great to have you back. Brad Sherman, Democrat from California, thank you. Markets are extending losses now. The S&P down 2%. This is Bloomberg. World Headquarters in New York. Eric, how you watching this? We know, of course, this was a market that was pretty toppy before these headlines broke.
That's exactly it. There's a lot of selling right now in the big tech stocks that really were powering the thing higher. And really, it's about taking this moment where President Trump talked about tariffs, increasing massive tariffs on Chinese goods, and that's really a sensitive point for the market. And it's an opportunity. It's unclear right now if this is an opportunity to take some money off the table and really, sort of process where things are, or if this is an outright kind of the beginning of an outright panic. And really what you need to do is sort of take a look at what happens at the end of this session and what happens over the next couple of days as things sort of play out, because we haven't seen a 1% pullback in the S&P 500 since August 1st, and we haven't seen a 2% drop in the S&P 500 since April during the last tariff freak out. So really it's about kind of where this goes from here, and if this is a moment in time or if this is really something that's going to last.
Eric, we saw soybeans also take a hit this morning in the wake of President Trump's post. Are you looking at any other sectoral equities that might take a hit for the rest of the day or in the days to come?
Well, it's really, when you look at the tariff stocks, everything is selling off. Right now, the S&P 500, there were 400 stocks that were down. So you only have 100 stocks that are up. The risk is all over the place. It's small caps in technology. Anything that grows really is sort of right now is pulling back. And you have oil falling, you have gold rising, so it's all these sort of haven situations where people, what they call a flight to safety, where people are looking at safer assets, and that could last. However, things had gotten very toppy. Things had really gotten to the point where you would question whether there was any more to come from this. So this could be an opportunity to pull back. And that's really where traders are right now, is sort of in a holding pattern where, okay, let's lighten up the load a little bit, but let's see where things stand, because, you said the word taco. The question is where this goes from here, and if the tariffs really play out, because nobody really knows exactly what he meant by massive increases. Where is it exactly? Right. What exactly is going to be hit? And that's really the questions that'll be answered over the next couple of days.
Really great to have you, Eric. Thanks for your read on this. Eric Weiner at World Headquarters in New York, Bloomberg senior equities reporter with us here on Balance of Power. Alongside Michelle Giamrisco, I'm Joe Matthew. It's time to assemble the panel and get their take on this. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. Rick is our Republican strategist and partner at Stonecourt Capital. Jeannie is our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center. Boy, how should we be looking at this, Jeannie? You read the long post on China, and there's not really a lot in there. He talks about massive tariffs, but does not quantify them, to Eric's point. He suggests that there's no reason to have the meeting with President Xi, but he doesn't cancel it. Isn't this the kind of move we've seen before, with big bluster before a big sit-down?
It absolutely is. And to your interview with Representative Sherman, it's not the way we normally make important policy decisions, this sort of venting, which is what this seems to be, and riles the markets, understandably, in this way, without any sort of sense as to where the United States is going to head policy-wise. And part of this is that we heard U.S. lawmakers earlier this week talking about banning chip-making equipment to China. We are seeing China post these regulations that very much mimic what the United States has done in the area of semiconductors. This is not a big surprise on China's part. They're going into negotiations with the United States. They need to have leverage, and we should have leverage ourselves. But for the president to sort of respond in this way doesn't seem like he is using the type of strategic leverage approach that we're seeing out of Beijing. And that is going to leave the U.S. weaker as we move, if we move into these negotiations. So, I don't think it makes much sense. And it's certainly not the way to do business with an equally powerful partner like China.
Well, Rick, to Jeannie's point, we've been in this sort of tit for tat for a while, including with the tech and export controls issues that have come about between the U.S. and China. I'm wondering why today? I mean, even just yesterday, the president was saying, you know, there are things that the president of China would like to discuss with me. There are things that I would like to discuss with him. It seemed like we were on the right track to have that talk at the end of the month. Why has this blown up overnight?
Well, I do think there's some reaction to China's moves to lock down export restrictions on some of these rare earths, some of the technologies around some of the refined products. Remember, it's not like they're just exporting a element of rare earths. They manufacture these things into usable parts, and that's what we buy. And they're clamping down on that, and they're clamping down on chips. They took the first move. And I'm pretty sure that the president's national security staff probably were pretty apoplectic about this, because every time we make a deal with them, it's with the sensitivity that China's going to keep, you know, certain things flowing while we continue to buy their products. And the reality of it all is we have not been treating China as the adversary they are. We keep talking about them being a competitor, and they're not. They're an adversary. And I think this is probably, whether it's a device headed into South Korea, whether he meets Xi or not, or whether it's just an extension of the policy he's already had on China. But we got to get used to having a different relationship with China, and I think today's probably a step in that direction.
Well, you know, case in point here, there is no bigger gainer that I can find in the middle of this sell-off than MP Materials. It just hit an all-time high, Rick and Jeannie, above $81. It's ahead by 13%. This is the materials, the rare earths and materials company that the Pentagon took a stake in. And we have seen others since then when it comes to lithium, Jeannie, and there's been a suggestion that more could follow. Does this codify or justify the administration taking stakes in the name of national security in rare earth companies?
You know, it's strange when you hear about the Republican Party in the United States, the administration taking steps like that. It seems like something we would never have invited as in the Republican Party, at least. But at this point, the United States does need to take steps. And you know, what's so baffling about this is while Congress is sitting on the side, not doing, not even meeting in the case of the House, there are steps that can be taken. China does not have a sort of hold on this kind of rare earths. The United States has the ability, had we worked on this in the past or even today, to be in a position to compete on this, and we have not done it. We're sitting in the middle of another in a long line of shutdowns. And, you know, the market is responding to China and this announcement. They haven't responded to the shutdown, but that's frustrating to me, because I think they should respond to the fact that when the United States government isn't working, this is the kind of result of that. And so the sort of ho-hum attitude out of the market about the government shutdown, I think, is something that we should pay more attention to, because they are changing their focus from where it should be, which is that the government has got to work so we're in a position to compete economically and secure ourselves.
Well, Ginny, if I could follow on that, I mean, we've been waiting for a long time for the China hawks in Washington, who are usually so vocal, to come out and sort of challenge the president on what was seen as sort of a soft policy for a while, extending the trade truce and talking on a range of negotiations, TikTok being one that was taking a softer line than previous administration had. Where are those hawks, and where do you think the Democrats should be now in responding to something like this morning? Or do you think this could be sort of a blip in the radar and we return to U.S. and China are back on track, Trump and Xi will meet, in a few days?
You know, I do hope that they meet. We used to say, not just a few months ago, that there was one thing that everybody in Washington agreed on, Democrat or Republican, and that was confronting China, competing with China. I hope that is still the case. I think it's noteworthy that these new curbs on China's behalf are not supposed to go into place until November 8th. That would give them time to meet and to make some agreements on these kinds of things. So I do hope that happens. But yes, Washington Congress has to get their act in order to confront China, because there is a lot of work to do in this regard.
Looking at NVIDIA today, it's down 2%. We've seen certainly worse days for the stock. I know that there's a sentiment here of negativity on Wall Street, Rick, but if we were really concerned that we were ending our economic relationship with China, wouldn't we be in a different place? This is a market that was pretty frothy, as we established before you joined us here. And this could just be another Friday when we look back on it, no?
Yeah, I think if you look at it just from the stock market in an isolation, you can come up with a lot of different points of view on it, and they could all be right. But I do think the reality of this administration is that they are in the process of decoupling with China. They have been much more restrictive on export of technologies that could help the China Red Army than previous administrations. They have been, even though many of these tariffs haven't gone into full effect, the fact that they have them on the books and are prepared to use them as a weapon of statecraft is important.
They're reacting to breaking news today. That's just the vibe here in Washington. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, will be back on the late edition of Balance of Power. Michelle and I looking forward to spending some time with Patrick McHenry, the former Republican congressman, and yes, Bloomberg Politics contributor, on the shutdown next here on.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. Flaring trade tensions between the U.S. and China have sent shockwaves across markets, hammering stocks, oil, and crypto. The Dow, the S&P, NASDAQ off session lows, but still in the red with the S&P down 109 now at 66.25. That is a drop of 1.6%. We've got the Dow down 511, down now by 1.1%, while the NASDAQ Composite Index is down 509. For NASDAQ, a decline of 2.2%. NASDAQ 100 Index also down 2.2%. Russell 2000 Index of small cap shares down 1.7%, and the Mag 7 Index hit hard, down 2.5%. The 10-year 4.05%, with the 2-year 3.52%. Gold now at $39.89, up by about 0.3%. Silver is above $50 the ounce at $50.14, up 1.8%. And a retreat for crude was trading below $59 a barrel, 59 even right now on West Texas Intermediate, down by 4.1%. Bitcoin now lower by 2.7%, 117,870 on Bitcoin. Also coming up, 5 o'clock Wall Street Times. Sources tell Bloomberg AstraZeneca is expected to announce a deal with President Trump to slash drug prices, marking the second pharmaceutical company to strike an agreement to advance one of President Trump's key health priorities. Right now, we do have shares of AstraZeneca. They are trading lower, down by 0.5%. Pfizer, you recall, was first out of the gate in late September. It agreed to slash some drug prices by as much as 85%. Pfizer shares down by 1.4%. Again, recapping, stocks lower. The Dow, the S&P, NASDAQ, all in the red, bouncing off the bottom, with the S&P now down by 1.6%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
Okay, Charlie Pellet. Many thanks, Charlie. Here with Michelle Jamrisco in Washington. We're spinning a few plates today because the headlines keep popping on the terminal. We started with the Truth Post about China, sent the markets south, as you just heard from Charlie Pellet. Then Russ Vought shows up just in time with the word that the rifts have begun. He says so on Twitter. We've been doing some reporting to
Market's trying to pull back up, but nothing too exciting is happening as of now. So we sit patiently and we wait. something happening. I'm sorry. And I'm a bit distracted as well. This house keeps coming up. buffering today. said, you know, when he said I'm the chair director.
In this converted parking lot in Silicon
Political events, you cannot control, COVID-19, but when they do happen, usually they're fast and furious and have an immediate impact, and that's what drove us into a very quick recession throughout COVID and others that we've seen through the course of time.
The U.S. has experienced at least 30 recessions throughout history, dating back as early as 1857. They may have become an inevitable part of the economic cycle that fluctuates between periods of expansion and contraction.
History teaches us that recessions are inevitable.
I do think recessions are part of our business cycle. Do I believe that they're completely inevitable in a capitalistic society? Partly. There's so many events and external factors that contribute to recessions, such as supply shocks, demand shocks, geopolitical issues that come about.
It's part of human psychology to get too excited about things. And when you get too excited about things, you ultimately have asset bubbles, and those ultimately lead to recessions. It's also part of human nature that people will continue expanding their firms and businesses as long as the economy is good. And as long as that keeps happening, you'll eventually overheat, which eventually will lead to a recession.
Nonetheless, certain measures can be taken to make recessions less likely. As the nation's authority on monetary policies, the Federal Reserve plays a critical role in managing recessions.
With the right monetary policies, the Fed can prevent a recession. It's just very difficult to do so.
There are two things that the Fed can do to avoid a recession. One is to steer the economy so we don't get so much inflation that they have to slam on the brakes. The second is to pay close attention to the financial system so we don't have a repeat like the 2007, 8, and 9 recession, which was caused by too much lending, too many mortgages, and too much careless securitization on the part of Wall Street.
The Fed has often attempted to avoid a recession by engineering what's known as a soft landing. This is where precise interest rate hikes are used to curb inflation without pushing the economy into recession. But a successful soft landing is extremely rare, arguably achieved just once in 1994.
So what they're trying to do is raise rates enough so demand slows. So it's really a tough needle that they're trying to thread to get our economy in equilibrium.
Now the question is there an amount of pressure that they can apply onto the brakes that's enough to control inflation, but not enough to crash the economy? And the truth is that that's really, really difficult to get into that really, really narrow zone. It's the difference between trying to land an airplane in a really wide, spacious, open field versus trying to land an airplane on a very, very narrow piece of land with rocks and water on either side.
And that's why they call it hard
Some
landing.
experts argue that policies have a clear limitation on what they can achieve against an impending downturn.
Policy tends to operate with long lags. I also think that increasingly we live in a global economy where the cross currents that are impacting, the economic dynamics are very complex. These are dynamics that the Fed doesn't have tools to address. And so, to a certain extent, we do think that policymakers, have certainly developed more tools to fight recessions, but we don't think that you can, rely on policymakers to prevent recessions.
There are several early signs of recession that investors look out for.
one tool that's commonly cited is the yield curve, right? The yield curve inversion. When the yield curve tends to invert, it means that people expect that the bond market expects interest rates to be higher in the short term than it does in the long term. That's because the Federal Reserve hikes rates to control inflation, and then after inflation is controlled, it cuts interest rates back down. So if you see that the market expects high interest rates in the short term and low interest rates in the long term, that's indicative that a recession is coming, followed by an interest rate cutting cycle.
A lot of people look at some of the manufacturing indices, like the ISM manufacturing index. When it tends to be above 50, means that the economy is expanding. But when the ISM starts decelerating and approaches 50, a lot of people say, okay, the manufacturing side of the economy is going to contract, that could be a recession indicator. Third recession indicator that a lot of people look at is consumer confidence, and suggest that, well, if consumer sentiment and consumer confidence goes negative, that means consumers are going to pull in, take the credit cards away, and not spend, and that could cause a contraction in the economy.
A diverse portfolio can often provide the best defense.
Diversify your holdings of assets to make sure that you're including not only growth stocks, but more value stocks and more defensive stocks.
You know, like healthcare, like the utilities market. These are the companies that can manage through this process a little more effectively than some of the hyper-growth firms that are leveraging the credit market more so than maybe a company with a ton of free cash flow and really strong balance sheets. And that's why I think there can be some value in recessions, not too deep and not too long, but in scenarios where we are overheating, assets have gotten way out of whack, and we need to get to a point where they get back to fair value.
It also creates opportunities to be a stock picker. It's very hard, to buy stocks in a bull market, but very often recessions and the bear markets that come with it create brief opportunities to really reload your portfolio, to buy the stocks that you've wanted to own, essentially at sale prices.
But whether recessions are actually good for the economy remains widely debated.
Look, recessions are very healthy things for the economy because ultimately recessions flush out excesses. So you think about it, when we have a recession, it reduces whatever extreme bubbles may have built up.
I think that's ridiculous. This notion that somehow we need to cleanse the system and a recession is a cleansing thing. It's like saying everybody should have a heart attack once in a while because it'll make them eat better and exercise more. It's just not true.
You know, recessions cause job loss, and every job loss is enormously unfortunate. Becoming unemployed is enormously disruptive to people's lives. It causes enormous pain for families, for households, for communities. It's terrible.
For Americans, understanding how recession works can best help them prepare for whatever may lie ahead.
Understanding, the dynamics of a recession allow you to potentially be, more opportunistic and protective of your wealth, should these downturns happen. Knowing that it may be coming, can help you think through decisions about, do you want to buy a house or do you want to rent? Do you want to take a new job or do you want to, maybe wait? Because the job market, may soften up. These are all things that if you possess the knowledge of the business cycle can help you manage your financial life in a much better way.
We're not far off power hour. into the last hour. Market start to hit new lows. Market coming down again. Not looking good. hour. market is quiet. Quiet after that drop. SPY coming lower though. Can't see nothing wrong. The market's still going down. I can see plenty wrong. The market's still going down. Huh? Quickly look, see if Trump speaking. I don't think so. Alright, let's look at these yards one more time. 8 o'clock actually. I've got plenty of time because it's Friday. We ain't got no job. We ain't got shit to do. Ain't nobody ain't your friend. Nobody ain't your. Ain't nobody ain't your friend. Ain't nobody ain't your partner. I said I got you, then I got you. Oh, where's my headphone charger now? Let's start losing that now. Ain't nobody ain't your friend. Nobody ain't your partner. Market falling. Oh. Oh, I wanna do a little bounce. Spy trying to bounce from the low, And we got like 15 minutes to go. Walking into the last 10 minutes. tidying up and everything, and then come smash this workout. Coming down again. 5 minutes to go. I hope everybody has a good weekend. Don't get too drunk. Stay safe. Yanzi. Yanzi. Spy coming down. Oh my gosh. 10-minute break. Let's see if it's gonna poo the bed. Last 5 minutes. This is gonna fall. Doof, 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 doof. Experienced traders will know what I'm talking about. Wait for it, wait for it. Here we go. Oh, oh, oh. Oh, oh, here we go. Is it gonna do it now? Is it just gonna go? Let's find out. Oh, the video's going. Can it drag the spy if Tesla goes? Tesla go, no, Tesla's going. Oh no, here we go. 2%. Are we gonna end at a 3%? That is crazy. But this is good for people that's trying to pick up long term, because obviously you're gonna get loads of stocks that just had like a 2% plus pullback. So it's good buying time right now. It's good buying time. But again, because we're at all-time high, you gotta tread really carefully. Really carefully. Let's see if it wants to go. What we got? Last 3 minutes. Last 3 minutes. %2 drops enough, to be fair. 2.5. Oh, that's greedy. That is greedy. That is greedy. 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 Come on, today's been a great, profitable day. I'm kind of gutted I come on stream literally just as everything was tanking. I'm absolutely gutted. But we in no rush. No rush. Ooh, looks like the market wants to show. Is it gonna do the drop? Is it gonna do the drop? Oh, the video going. Tesla's mostly saving the day for the 3% up. It's going though. It's going. But we got 1 minute. This is not looking good. So what I will say, if you're a serious trader, you want to start watching out what's going on over the weekend, because again, most people will be too busy partying. But if you pay attention to what's going on, it will position yourself obviously for Monday. So right now, what time is it? 9 o'clock. Everyone's gonna be out partying right now. The serious ones that want to make this moolah. We ain't got time to partay. Alright, what we got? Last minute. Last must have got about 30 seconds. Is it gonna do it? Ding, 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 ding. That is the sound of the bell. And that indicates to you that this is real money. God bless you all. And I'll catch you next